Okay, so got middle finger for Uncle Sam. I don't pay so much taxes like a fun Japan. My error, so original. Okay, so it's now 11:55, and obviously, as always, that you're gonna see me on this live stream at exactly 12 o'clock. I'm gonna be placing a trade. So in terms of the direction um, that we're going today, it's gonna be a short trade today. The first short trade I'm gonna be placing today. So I'm gonna be going short in about 5 minutes. And again, this is just a guide to show you which direction I'm placing the trade. It's not it doesn't tell you exactly where my stop loss is gonna be. I need to, why is this noise coming up from this my FX book? I need to mute this. Yep, okay, that's done. So let's have a look at my FX book account. Like I said, this is in the description. The link to this my FX book is in the description for you guys to have a look. This is the fourth day that I'm doing live trading, and yeah. So if you haven't seen the first 3 trades, you gonna have to look back to the previous 3 live streams that I've done to see the trades. And yeah, so like I said, everything now is not verified, because this is really important. If this isn't verified, it's likely gonna be it shouldn't be something you can trust really. So now everything is verified. The link is in the description, so you guys can view this my FX book account at any time. So even when you're rewatching the live stream later, you can see what the results of the trade is. So like I said, so far we've taken just 4 trades, and obviously that's the fourth day that I'm doing live trading. And the first couple of days, obviously the first day actually, that's when I took this losses. And the trade that I'm going to be placing today is going to be similar to the one I took on the first day. So but obviously, like I said, this time around, let's see where the market is going to go. Hopefully we're going to get 2 trades today instead of one, because we've only got one in the last couple the previous 2 trading days. So yeah, so that's the my FX book account. Like I said, I will be referring to these constantly throughout the live stream. So let's go over to the trading view, and yeah, so it's going to be a short trade today. Like I said, And as always, guys, your questions, anything, if you have any questions, just kind of drop it in the live chat, and then we're gonna talk about everything, because this is I just love talking about trading. So it doesn't matter if, if you have any questions regarding trading, um, just ask away. So let me just bring up my. So this is my MT4 account that I'm using for this trading. So as you can see, it's the same. The balance you're gonna see here is gonna be reflected on the balance you're gonna see on my FX book, and yeah, same account number, everything is the same. So yeah. So in about 2 minutes, I'm gonna be placing a short trade. But this is what I would expect the market to do today. I'm gonna paint a picture for you, and even though at this moment in time, it's I think we're gonna crawl up some more. So this is potentially gonna be a losing day, but it's not gonna be as bad as the first day. But at the end of the day, like I said, it's so this is it's gonna sound weird. I mean, I'm saying this is potentially gonna be a losing day, and I'm still gonna be taking the trade in that direction. Why am I doing that? Because it's all about the rules. It's all about the strategy. If the strategy tells you to do something, this is what I mean by consistency, guys. You have to always be consistent. You have to consistently follow your strategy. You know. So today my gain is $1. So my highest gain in swing trading. I hold it for 4 days. Thank you. Wow, you're welcome. You're welcome. I'm so glad to hear that, Atul. So glad to hear that. That's amazing. So anyway, it's with just about coming up to 12 o'clock, so I will be placing the short trade now. So let's me go over to my account. So like I said, this is gonna be a situation where expect this to be a losing day. So this is the way I'm gonna plan it. So let's go for 0.05, and it's 12 o'clock, 10 seconds away. There you go. So I'm short. So I'm short on this trade. Why is this notification coming on? I'm short on this trade. But I expect the market to, because this kind of trades, this kind of patterns, they can potentially crawl up until about 1 o'clock or 1:30 or even New York session before we get a reversal. So sure, I'm gonna do a, don't worry, I'm gonna do an analysis. So any currency pair that you give me, I'm gonna do an analysis on them. That's fine. But yeah, so I've taken a short position to this on this trade. Like I said, this is just, don't worry about it, this is just a guide. And so based on my strategy, my daily trading strategy is a short, signal to trade. And even though I know this market can have the potential to crawl up to, but the thing is that the higher it goes, the more chances of this being a losing trade. So let's wait and see. But this is going to be a long stream. Like I said, it's probably going to be till about New York session before we see what happens with the trade. So now that I've placed the trade, as you can see, I've placed the trade here, and I've gone in with 0.05 lots instead of a 0.1 lot, simply because, like I told you guys, this is not the kind of trade that I expect the market to reverse at exactly at exactly 12 o'clock. This could take a while before we get a reversal, and obviously the longer it takes to get a reversal, the more chances that the market is going to keep going. This is different from the strategy that I traded on Friday. But yeah, so let's head over to my FX book, and hopefully it's been updated. Not yet, so it's going to be updated in a couple of minutes. In a couple of minutes we're going to see the the trade that I've just placed on my account. You can see it updates every 5 minutes. So, but anyway, yeah, like I said, we're gonna do some analysis today, guys. So definitely, I know someone has asked me to look into NZ, the New Zealand dollar, and yes, I'm gonna look into that. I'm gonna look into other currency pairs as well. But just to kind of have a bigger picture on what's going on the GBP USD on a higher time frame, I think I've touched on this a little bit in our last. So let me just get rid of this. So this is what you're gonna see. So this is a textbook bearish continuation trade. I mean, I've taken a short trade on a daily. I've taken a short trade on my day trading strategy, but looking at this on the bigger picture, you're gonna see a typical bearish market continuation trade where we had an impulse leg to the downside. The market gave you a little correction. The market has now created a new structure low. Now we're getting a reversal back into. So if you're familiar with a bearish structure or a bearish market, then you will know that this market is currently in a reversal zone. And what I mean by reversible, we're talking about anywhere between the 382 retracement and above this previous structure. This market will give you a reversal sometime, anytime from now, basically. Now, it doesn't mean that straight away the market is going to reverse. No, it means the market can crawl up some more, can go even deeper before we get the reversal. But this is definitely coming. This reversal is definitely coming. Mark my words, the reversal is coming. So that's why I said today's trade, it can be a winning trade, and it can also be a losing trade. I think it's more on the side of a losing trade than a winning trade. But we just have to wait and see. But like I said, whatever happens, you know, in this week, we're gonna get this move down this week. And based on my strategy, I will be on that move down, guys. I will be taking a short trade, and I will be making some profit on this short trade move. So that's why sometimes, you know, in trading, you have to try and look at the bigger picture. That's why it's not about one trade. It's not about two trades. You know, don't ever look to kind of make a huge amount of profit on a single trade, or don't ever try to look to risk too much on a single trade, because like I said, based on today's pattern, it's not, I wouldn't classify that as my favorite pattern when it comes to this particular strategy that I'm trading. It's not my favorite one. But I've seen trades like that, you know. But then again, those are the kind of trades where if the market does reverse, like if the market does reverse today, let's say at around 1 o'clock or New York session, I will make a huge in terms of the profit potential is very huge compared to other patterns. So, and also the fact that this market, looking at this market, I know potentially we are going to get this move down either tomorrow or Wednesday or Thursday. This big move down is coming, and it's probably going to be as fast as this big move down. But this market needs to do what it needs to do here. The market, you know, it can take as long as it wants. It can keep crawling up, but eventually this move is going to happen, and I'm going to be on this move. I'm going to be taking a short trade when this moves happen on a daily chart, on my daily trading time frame, of course. So let's head over to bring it back to the 5-minute chart. Okay, I'm gonna have to delete this because it's getting in the way. And let me bring up my shaded area, and this needs to go. But just bear in mind that we are in a reversal zone. We are in a reversal zone, and this time the RSI is useless in situations like this. It's useless even though it's showing overbought conditions, divergence and whatever. If the market wants to keep going up, it's gonna go up because the reversal zone is quiet. It's not a small reversal zone. But anyway, on the daily chart, it has some strength to go upside. Okay, let's look at the daily chart then. Let's have a look at the daily chart. Yeah, but don't forget that on the daily chart you have the market coming into structure level. So it's not by strength of going upside. The market is coming into structure level, and if you remember correctly, what I said in the last probably the previous stream, when I talked about the fact that every time a market breaks a structure, it should never be a signal to just sell straight away, because the market would give you a breather. It will retrace to the nearest structure. So to this market, this is just a retracement for another move down. So I would be very careful if I'm going long on this market. I'll be very, very careful because of the fact that these two daily structures here. And you know, when the market comes to a structure level, it doesn't just break a structure level and goes. Especially a structure level as strong as this. I mean, look at this structure level. What do we have here? We have first test here. In fact, we have there's a little minor test here all the way back here. So let's extend this. Yeah, so structure level. The first time the market came onto that structure level, it just bounced back up. Came back again, it bounced back up before it finally broke the structure level. So do I think the market is going to come and just blow this structure level on the first attempt? No, I don't think the market is going to do that. I think we're going to get a market coming back to that structure level and giving you a move down. And if it wants to break the structure level, then it's probably going to come back and try it again for the second time. And it might succeed on the second time. But all I'm saying is I don't see the market breaking this structure level on the first try. So we could go a little bit higher until around 136.07, which is about 22 pips from our current position. I think that would even be amazing. Like with my strategy, I mean, if we get there by 1 o'clock, 1:30, or even New York session, then I will be adding to my short position. So yeah, daily chart, the market is still kind of correcting, but I would be very careful, going long on this market. Because I'm telling you, everything points to a bearish continuation. Everything points to a bearish continuation. So do not get kind of scared by any kind of little movements to the upside. Because even if you look at the particular structure of this market, this is not a structure that goes up compared to the one we had on Friday. You see the one on Friday? Just compare those two structures. This is a bit chubby, a bit sideways. It took this market a whole. So we had about 60 pips movement from about 7 o'clock. So 5 hours, about 60 pips movement. What did we have here? 90 pips movement. So you can see where the momentum is. I don't think this one has enough momentum. Like I said, it could go up some more, but I don't see it getting to those kind of levels that will break this structure on a daily chart. And we're not really too far away from there. So but anyway, let's try and do some analysis. And yeah, if you guys have any questions, just drop it in the comment section in the live chat, and I will be answering every single one of your questions. But let's have a look at some other currency pairs. And I'm gonna start with New Zealand dollar, because someone did ask me to have a look at that. So I'm gonna start with New Zealand dollar. Kiwi, let's go. Okay, this is really interesting. Structurally speaking, this is very interesting because it's there's two ways you can look at this. If you look at this as a whole on a 4-hour chart, or even let me see if I can get a better picture on a daily chart. If I put this on a daily chart, what you're gonna see is, straight away at first glance, you're gonna see that this is a corrective pattern. It's a corrective pattern that tends to break to the upside. Corrective pattern because we had a huge impulse leg here. Oops. Corrective pattern because we had a huge impulse leg here. And this is a corrective pattern on a daily chart. So let's you know what, let's do a proper, let's start off with the weekly chart, because the weekly chart might give you a different type of reading on the weekly chart. Okay, no, weekly doesn't really tell me anything. Weekly tells me the market is bullish, it's still bullish. So let's go back to the 4-hour chart, the 4-hour chart, and analyze this a bit better. So New Zealand dollar is in a corrective pattern that's likely gonna go up once the correction is over. So like I said, this is a whole corrective pattern, and these patterns tends to break to the upside. In terms of wave count, we have 1, 2, 3, 4. Now the question is this wave gonna come and make a low before it finally takes off? Generally the market does that. Generally speaking, the market does that. So if you're in a New Zealand dollar trade, if you're long on a New Zealand dollar, I don't think you need to be worried. As long as you just have enough kind of as long as you make sure that if the market comes back below this level, your account is still going to be safe, then I don't think you need to worry about that. This is probably the only dollar currency pair that's showing signs of bullishness compared to the GBP USD. The GBP USD is bearish. I wouldn't say it's bearish, but I think in the short term we are gonna get some more bearish movements. In terms of lower time frames, do we have any trading opportunity on a lower time frame? Not really. I mean, you can look at this as a potential reverse head and shoulders, and you can expect this market to at least go up and make another high. That's probably the only thing I would say. So short term, you can probably be looking at New Zealand. The short term is a long trade. Long term is a long trade. But just being on the cautious side that the market could come back and break this low before it goes up. It can do that. So let's have a look at the euros. I touched on the euro on the first or the second live stream that I've done when I said that we had a really important level here, where if the euro breaks that level, the market will take a breather. So now we've broken that level, and you can see the market is gradually coming back into the level. That's what the market does. You can go and do a research on so many structures, on so many charts. Just keep a journal. Just do a research where you look at every single time the market breaks a structure. Just try to understand the behavior of the market after it breaks a structure. And I'm gonna promise you guys that 90%, 80% of the time a market breaks a structure, it retraces. It retraces 80% of the time. And there's one thing in trading called the fear of missing out, where usually when new traders, when they see the market breaking new heights and the market breaking a new structure, they panic. They'll be like, oh, the market is going up, I'm going to miss out, the market is going up. And that's when they buy or they sell, depending on which direction the market is going. And then as soon as you've done that, you see the market start to go against you. That's because people do not understand the concept, the language of the forex market. They do not understand structure. This is how structure works. Every single time you see a market breaking a structure, your brain should tell you that that is just a sign of communication. That is just the market, talking to me. It should never be a sign for you to just go on your trading platform or on your phone or whatever and just click a buy or sell order. You don't do that. But if you don't believe me, like I said, just go look at the charts, do your research, study these charts. If you look at 100 different structures where the structural point where the market breaks a particular structure, just do the maths, keep a statistics, look at how many times the market has actually gone in that direction after breaking a structure, or how many times has the market actually traced back to find another structure level before it continues its movement. It's just that's a normal way of the market moving. And sometimes, like I said, sometimes when it breaks that structure, the retracement sometimes can be a lot deeper, that it can confuse a lot of people that will think, oh, maybe that's just a fake out. The market doesn't do anything with it. The market has a rules that it stick to. Even the market has rules. That's why if you need to have a trading strategy, you need to have a rule for your trading strategy that you can follow, because the market follows its rules. The market is not random. No matter how people might try to tell you that the market is not random, it's not random. The market has rules. It sticks to its rules. It's just up to you to try to understand the rule. Yeah, up to you to try to understand the language of the forex market, as I like to call it. So yeah, so here we've broken a structure. The market is retracing, and how deep or where this retracement is gonna go is something that you can just use structure to try to guess, because you can look at this previous structure. Okay, the market could come back to this previous structure and it could reverse, or we could come back to a particular Fibonacci retracement of this last move, maybe 618, maybe 50%, 886. And this is a situation where you can't guess exactly what the market is gonna do here. You can't. The only thing you can wait for is for the market to show you signs that, okay, it's finished, it's retracement and it's about to resume the downtrend, and then you can jump on it. So this is why trading can be so hard at times, because you're going to come across lots of strategies that will tell you, okay, this is exactly what the market is doing. Every time market breaks the structure, it comes back, retraces the previous structure, and then drops. But then this market is not gonna, there's the chances of the market doing that is probably 30%. Because there's another strategy that tells you, oh, the market will trace back to a certain Fibonacci level, 50%, or 382, or 618 retracement, and then it drops. But then you have other strategies that will tell you that if you take a look at this whole corrective structure, this is my contraction and expansion strategy. The strongest point of this whole structure is a line through the middle, and there's equally same chance of the market retracing back to that middle line before it drops. So the only thing that you can guarantee is the fact that every time a market breaks a structure, really, the market will retrace 80% of the time. That's probably the highest level of percentage you can apply to anything in terms of what the market is going to do after breaking the structure. Now, where is the market going to go? So we're going to follow this over the live stream. We're going to follow this and we're going to see exactly. But I can guarantee you that at one of these levels, the market will retrace either this previous structure level, or either a certain Fibonacci level, or going back all the way to the middle line of the box before retracing. It's going to do one of those things. So let's move on to like I said, if you've got your questions, drop it in the comments there. For those of you that are joining, just joining us, I've taken a short trade. Let me just recap and tell you what I've done today. So let me bring in my what happened to the last one. Let me bring in my so I've taken a short trade on the GBP USD today. I think I've taken a short trade around 135.91. I'm going to show you that on the account as well. Just give me a second. And the expectation is that this market, even though I've already said this at the beginning, this market, I'm expecting it to crawl up. I don't expect the market to give me any signs of reversal until we get to about 1 o'clock or even New York session. That's when I expect the market. But on a higher time frame, this market is in a reversal zone on a higher time frame. So looking at this again, back on the 4-hour chart, I've already explained this. So if you're joining me late, you probably haven't seen this, but I've explained already. The market is currently in a reversal zone, where I would expect at some point this week we are gonna get an impulse leg to the downside, and that's gonna be a trade that I will be taking as well. So in the meantime, we are in a reversal zone, and so let's go over to short position. That's where I took a short position. Don't look at this as this is just a guide to tell you exactly which direction I've taken my trade. It's not it doesn't tell you exactly where my stop. I don't use stop losses when I trade. So but anyway, looking back on the account that we've placed, so this is, I've placed a trade. So as you can see, currently down about, how many in terms of pips, 90, 97, about 7 pips. I've gone in with a lower bit of a lower risk this time, because this is the kind of trade, like I told you, is similar to the first trade that I placed on the first live stream that I did. With this kind of trade, I do expect the market to go a bit higher, and if I was to go a bit higher before it reverses. So in that case, I'm not gonna go in with the the same kind of risk that I took on the first day. So that's why when I expect this trade to be a losing trade. If I'm being honest with you guys, I expect it to be a losing trade, because this is similar to what I just explained to you in terms of you can never tell exactly when the market is gonna reverse, or at what point the market is gonna, you can never call that, you can never predict it. So this is one of those trades where I know the market is in a reversal zone, and at some point we're gonna get that move to the downside. But this is gonna, it's more like, but it's based on the strategy again. The strategy tells me it's a short trade, and I've taken a short trade. But I expect this to be a losing trade. I could be surprised. The market could surprise me and give me a reversal at 130 or New York session. But we have to wait and see. And in terms of, like I said, this is my FX book account, which I'm trading every single trade that I placed on my MT4 platform. You're gonna see the trade here, and the link to this is gonna be in the description. Actually, I should put it in the description now, but I'll do it in a bit. But it's gonna be, if you look at the previous live stream, you're gonna find the link in the description, so you can have a look and see the trades. So every single trade, like I said, I placed is gonna be reflected here, and you're gonna see all the statistics and everything that you might find helpful. So anyway, let's go back to the trade. So let's try to analyze the next currency. But if you have any suggestion, just drop it in the live chat, or if you want me to have any questions, anything you want, questions, charts you want me to analyze, and yeah, I will have a look at them. So but we're gonna move down the order. So the next one on my list is the Aussie dollar. So let's look at the Aussie dollar. Ashim says the goat is back. Well, thank you for the compliment, I appreciate that. So looking at the Aussie dollar, I think I've looked at this on the previous chart as well, when I told you that listen, one thing guys you have to realize is the fact that when you're analyzing the market on a higher time frame, it's a lot easier to kind of predict what the market is going to do on a higher time frame, because on the higher time frame you just have to follow the trend. You don't have to do anything but just follow the trend, so we're in a higher time frame here. I've already looked at this in the previous live stream where I told you we're on a currently the Aussie dollar is in a downtrend. We can see that on a weekly chart. The market is trending down, and what the market is doing so far, it hasn't broken any structure level that will change that trend. Now to this market, it's following the rules. If you ask this market, like if this chart is a perfect chart, the market is going to tell you yes, because it's following the rules. And if you understand the rule, the bearish market rule, or the bearish structure rule, you can look at this and say, yeah, this is perfect. Even though it looks imperfect, it doesn't look symmetrical, but to the market, it's absolutely perfect. Now what I mean by that is we have a move, bearish move down. We have the correction, pullback. Another move, create a new structure low, pullback. Another low, create a new structure low, a pullback. New structure low, a pullback. And you can see every single time the market pulls back, it does not break the previous outside return, the previous retracement. So to the market, this is a perfect move. And it's creating new structure low every single time. And the market will continue doing that unless it ends up breaking this pattern. So no way can you expect the Aussie dollar to go. You can expect the Aussie dollar to crawl back down and create a new structure low. The only thing that would change that is if the market decides to go up and break its rule and break this previous structure, then yeah, you're going to say, okay, the market now is talking to you. It's telling you, listen, I'm about to change. I'm tired of being bearish. I'm about to go in another direction. But then again, you have to remember the fact that if a market breaks a structure, it should never be a signal to, it's a sign to try to listen, to try to understand what the next move is going to be. And after breaking the structure, the market might gives you a little pullback before it takes off. But based on what the structure is currently, bearish this market is favoring the bearish side. The market can or should continue going down and create a new structure low. So in terms of looking at this on a lower time frame, let's see if we have a potential trade on a lower time frame. No, we don't really have a I mean, I would say short trade is more favored because the market is in the, you see, this is another kind of one of the strategies that I trade people in terms of complex contraction. This is a complex contraction where the market gives you a move down and it gives you this choppy sideways corrective pattern. This is a complex contraction. A complex contraction, the market breaks to the downside. You can expect the market to retrace back into around the 6-minute retracement, and now we can expect this market to go down. This market has a potential. So if you look at this market on a higher time frame, a weekly time frame, we see the market is bearish. We look at this on an hourly time frame, we see the market is bearish. All the signs is pointing towards a bearish continuation on the Aussie dollar. 15-minute time frame. Do we have a potential advanced pattern? Because that will probably confirm a lot of things. So we have we have a Gartley pattern. Do we even have a cipher pattern? No, it's just a Gartley pattern. So we have a Gartley pattern on the 15-minute time frame that has actually just completed. Gartley pattern that has just completed. A bearish Gartley pattern on a bearish market which has just completed at the 127 extension. So expect this market based on everything. This is how sometimes when you do an analysis and every one single one of your analysis points to the market doing exactly the same thing. So yeah, we can expect a reversal on the Aussie dollar. I'm gonna keep an eye on this one over the next couple of days in the live trade, and we're gonna talk about it. So I'll leave that. I'm not gonna get rid of that bearish pattern. I'm not gonna get rid of it. I'll leave that there, and we're gonna move on to the dollar card. So dollar card, let's look at the market on a little bit of a higher time frame. Let's go over to the weekly. Let's get a better picture of what the market is doing on a weekly chart. So weekly chart, we can see that the market is bearish, because we have an impulse leg. This is a correction. This is an outside return. The market should go down and make one more low. This is a weekly chart. So weekly chart, we're seeing the market being bearish. Let's head over to our daily chart. Yeah. A daily chart is showing kind of a consolidation after an impulse move to the downside, to the upside, sorry. And the market has kind of come into a little bit of a consolidation here. But every single pattern, if you understand structure, every single pattern that this market is making in this contraction is a sell pattern. This is a sell pattern. This is a sell pattern. Patterns that usually end up breaking to the downside, and we've already seen that once. We've already seen that twice. Now what is the market doing? It's probably coming in to make another kind of a sell pattern that will end up breaking to the downside. It's easy to read the market on a higher time frame. It's easy to understand what the market is doing on a higher time frame because everything is a lot clearer. And then I say you have to, if you're a swing trader, then yeah, this is gonna be music to your ears. But you cannot be a day trader and use higher time frame. Or you can do that for you to kind of analyze which direction the market is going. But like I said, what this market is doing right now is just forming sell pattern after sell pattern. Because on a weekly chart, we had an impulsive move to the downside, and this is just the correction. So at some point, we can expect this market to start going down at some point. Do we have a trade on a shorter time frame? Not really. We don't really have a trade because the market is kind of coming into a consolidation really. And this is too deep of a retracement for us to have an advanced pattern. Yeah, it's too deep of a retracement to us to have an advanced pattern. Although you might have an advanced pattern going in the opposite direction. No, again, this retracement is too deep. 786 retracement. We don't have an advanced pattern, so I would stay away from the CAD. I've already done the New Zealand dollar. Yen is an interesting one. We've looked at yen. We know which direction the yen is. Yen is probably has broken that structure. But this is a pattern that I told you 100% we're going up. Because this impulsive move followed by this corrective pattern, they will always break to the upside. And the first stop is going to be this level. Now once we get to that level, any guesses for what the market is going to once we get to that level? Why would the market do that? That's the question. Because we have an impulsive move here. This is the first wave of the correction. If you understand wave analysis, you probably understand this. You probably understand why the market is not just going to go up from here. It's not just going to go up from there. So in terms of dollar yen currently, you can look for longs up until this level, up onto 118. I expect the dollar yen to crawl up all the way to 118, and then once it gets there, we're gonna see what's gonna happen. If it breaks this structure, like I said, we can probably get a move down before the market takes off. But this is a clear long trade, a clear market is going up. I've got Bitcoin here. Let's check on our trades. We're slowly we're approaching 1 o'clock. Obviously 1 o'clock I will be adding on to my position. And yeah, so the market is not doing anything but still crawling up, which I expect I expect the market to do that. Yeah, I expect the market to do that. And yeah, this is gonna be a losing rate, losing day in the market. And yes, I will gladly take a losing day. And we come back tomorrow and fight. But let's see what the market is gonna do first of all. So moving on. Um, let's do some cryptos. I've got Bitcoin here, so let's have a look at some cryptos. I know there's a lot of people that trade cryptocurrencies. Bitcoin, I think I've already touched on this once on last week lessons, last week live stream. So Bitcoin, we're getting a kind of again, if you understand corrective patterns, we have an impulse like here, a wave here, a wave here. I expect this market to probably go back down here before we finally take off. Now it doesn't mean that it doesn't mean that this correction, this is because if you look at this pattern that the market is making, this is a buy setup. That'll probably go one more high, but I don't expect this market to break. I expect this market to come back down before it goes up. It can break because cryptocurrencies sometimes they can be very unpredictable. You can't really predict cryptocurrencies. They have a way of it's hard to predict cryptocurrencies, if you know what I mean. I mean, if you've been trading, you know how crazy they can be because they can go onto the bullish circle or the bearish circle, and then they just never look back. Yeah, but Bitcoin, I see some more sideways trading before we finally break the highs and go up. Ripple showing the same kind of a sign with Bitcoin. I expect this to come back down before it goes up because that will give you a classic 1, 2, 3 correction. A classic one. Yeah, so they're all bullish in terms of looking at those cryptocurrencies on a higher time frame. They're definitely bullish. So it's just a matter of waiting for this corrective patterns. So when the market is in correction, it takes its time. I've already told you this before, that when the market is correcting, when the market in a corrective pattern, it takes 3 or 4 times, as much days as as it would when it's in a trending market. Because the market, all these impulsive moves, they take less than a week. I mean, if you look at this one in particular, this one took 10 days. 10 days, and look at this corrective pattern. The corrective pattern is already on 171 days. So this is one of the reasons why people tell you there's a lot of patience. You have to be very patient if you want to be a trader. You have to be very, very patient, because just because of things like this, because the market is patient in itself to go through its corrective patterns, and then you wait for the right time. So let's look at the gold. Gold is next on my list. Let's look at gold. Gold is in a corrective pattern as well. So in a bullish corrective pattern. Bullish corrective pattern. So this could come back down, break the low, and then it will take off. But that's looking at it on a daily chart. Looking at it on a weekly chart, yeah, it's bullish. Gold is bullish 100%. I would probably get in a classic 1 to 3 correction before we take off. Now, mind you, I say classic 1 to 3 correction. It doesn't mean the market is gonna give you 1 to 3 correction all the time. No, sometimes it might give you a complex 1, 2, 3, 4, 5, or some kind of complex contraction. But you have to understand wave analysis to be able to understand this kind of corrective patterns. But yeah, but gold is bullish as well. So this is probably going to be a very good investment. If gold does come to break this previous structure, you can just buy and hold it, because I don't see this market. I mean, you can look at the trend. See, that is a very good trend. So gold is bullish, and let's try and look at some indices for you. And guys, you're not even talking in the charts though. Does that mean that we have everyone that's in the chart here? They're all professional traders. They don't need any. They don't have any questions on trading. So indices, US. Let me look at Nasdaq. They're all the same, but indices. I think I've spoken about this in a previous stream. I mean, this is just a long bullish trend that every single time the market dips, like what it's doing currently, presents you with an opportunity to go long. Because you can look at this market, look at the chart, and we're going to see constantly, you see all these dips. This is a kind of market where you just buy and hold. You buy and hold. Because even the kind of dip that we had during the pandemic, this is back last year in March during the pandemic, it still wasn't enough to kind of completely change the trend. So it's going to take something monumental in terms of fundamentals or technicals for this market to completely reverse this trend. And we know in trading, Forex is your friend. In fact, it's the only friend you've got. So the trend is your friend. So you just have to kind of, if you find a market that's trending in the right direction, just stay with the trend, whether bullish or bearish. But just at the same time, you have to just understand the language of the Forex market, because the market will communicate to you all the time. Because if you look at all these dips, there hasn't been a single time where the market has come below that any of those dips. Because if the market does that, that's going to be the first time that the market is communicating to you that, hey, I'm about to completely reverse the trend. There hasn't been a single time the market has done that. Even looking at it from way back here, all these dips, all these dips, all these dips. But at some point, it's gonna communicate. At some point, the market is gonna be tired of going up. You know, it's gonna do that at some point. So US oil. Let's look at US oil. US oil. Again, another one that's heading up. I think I've analyzed this on a weekly chart where I identified a structural level that I said we have to just keep an eye and wait for the market to see the reaction on that structural level. So yeah, the market is right at that structural level, around 76.90. So it's about 100 pips from that level currently. But you have to wait. This is a kind of point, the situation where you have to wait and see what the market is gonna do. It might take a couple weeks, 3 weeks, maybe even a month before the market tells you exactly what the sign, what the communication is. Because the expectation is, as a normal trader, as someone who understands resistance and support, you would expect the market to respect this level and come back down. But that confirmation will come in the form of a huge red weekly candle close. But if the market decides to go up and break this level, again, wait, patience. Because when the market breaks the structure level, it doesn't just go up. It will take a breather. And you have to factor in this impulse, like this impulse will need a correction. So the breather the market would take, the retracement the market might do here might be even a lot deeper than a lot of people think. It might come a lot deeper, but it doesn't mean that the market has forgotten that it has broken a structure level and it goes up. The market can do that because to the market this might be a reverse head and shoulders. This is why the market coming back to a particular a structure level before it goes up. So US oil is about waiting and seeing. Probably gonna take, like I said, 3 weeks or even a month to see exactly what the market is gonna do, and we're gonna be going through this on every single one of our trading sessions. And yeah, So let's go back to our trade and see what the market has done. I think it's still going up, which is expected to keep doing that. And at 1 o'clock, if the market is still where it is or even higher than where it is right now, I'll still be taking another short position, because all I'm looking for today in this market is just an impulsive corrective move, of 30-40 pips, and I'll be out, probably break even or even take a little profit from it. But for now, currently down 10 pips. If I bring in the account, you can see, yeah, down 10 pips. I'm winning with 0.05. So yeah, it could potentially be a losing day, but I already know that it's something that I already expect, because based on this pattern that I'm getting today, is a pattern that it's kind of like is a 50-50 pattern in my opinion, compared to the other patterns that I do trade with the pre New York sessions. This is the only one that's 50-50, because it can go either way. But if it goes my way, then the results are usually very good. So like I said, we've looked at this market on a higher time frame. We already know that the market is currently in a reversal zone, and it will reverse at some point this week. This is not going to be today. Unfortunately, it's not going to be today, guys. And it's something that if you even understand trading, the thing is, I have so much knowledge and a lot of different strategies where, and there's some kind of a strategy in trading that it's not really a strategy. It's kind of just understanding the way the market moves, in terms of where usually Tuesdays and Wednesdays are days where the market tends to reverse the trend. So it's like the market kind of starts on a trend towards the end of the week, like Friday, Saturday. No, well, Saturday the market is closed, but the Friday, Monday, Tuesday, the market kind of goes in a particular direction, and then from either towards the end of Tuesday or Wednesday morning, the market reverses that trend completely. So you can do that. It's not consistent. That strategy is not consistent. But if you do a research, you're gonna see how true that is, because if you look to apply to that in this situation here. So let's try and put some. This is Monday, right? We're currently in Monday. I told Kuma, most underrated channel. Wow, I appreciate that. That's a huge compliment. So let's look at this market. I don't need that border, do I? So Monday, Friday, and this is Thursday. Let's try to apply some of that rules to here, but like I said, bear in mind that this is not going to be consistent. It's not going to be always consistent, right? So Wednesday, Tuesday, Monday. We're gonna do a whole couple weeks and just look at it. You can get, guys, you can go and practice this on other charts, or even the same charts, and have a look at these patterns. It's not consistent, I have to tell you that, but there is some truth to it. The market does tend to reverse on Tuesdays or Wednesdays sometimes. Like I said, the market is not gonna do, it's not gonna make trading easy for you. This is just something that can guide you sometimes. So Wednesday. So let's try and look at what the trend the market has been doing so far. So I mean, we're currently in Monday, so let's try and understand the trend from Wednesday last week to where we are currently. So I mean, we can clearly see that the market is trending up, right? So we're getting a consistent trend here. So now the question is, when is this trend actually going to reverse? And when I told you that we're looking at this market on a higher time frame, we know that the market is currently in a reversal zone. Yeah, the market is currently in reverse. So before I even explain that, let me just show you what I mean by that. So I'm gonna go on a different GBP USD currency pair and look at this market on a higher time frame. And so I'll explain to you what I mean by the market is currently in a reversal zone. I'm going to refer back to that trend that we're just looking at. So this is the same currency pair, just that I haven't got the drawings on it. So this is what I'm trying to tell you guys. We have an impulsive move to the downside. We got the retracement, and we have another move to the downside, and the market is currently retracing. Now if you understand bearish structure, I have to keep repeating this because some people don't. This is the rule that the market sticks to, that you need to understand the rules of market movements for you to be able to understand or read charts to be able to trade. So this is an outside return. This is a corrective pattern. This is the market correcting back into the previous structure. I mean, you can call it previous structure, and you're probably going to learn trading from other people who might tell you that every time the market retraces back, you should try to sell at the previous structure. But I'm going to tell you guys, if you do that a lot, if you do that every single time, you're going to find out that the market doesn't always reverse on a structure level. To the market has a zone where if the market gets into that zone, whatever it does will be a natural reaction. So let's look at this. We're looking at this as from the 382 retracement and the previous structure level. This is the zone that the market, once the market is in this zone, to the market, it has already completed, it has already met the rules that it needs to do. So anywhere in this zone, the market would reverse. Anywhere in this zone, you're gonna get the next move that's gonna come from this market is gonna be a down move. So now, the reason why I'm showing you this is because obviously I'm speaking on the fact that I'm talking about a midweek reversal where the market tends to find a particular, tends to trend in a particular direction from like Thursday to about Tuesday or Wednesday the following week, and then it reverses the trend. So now one of the reasons why when I was taking this trade today, I told you guys that it could potentially be a losing trade, but I don't go against my trading strategy. I don't go against my rules. My rules tells me that today is going to be a short trade, and I've taken a short. But also knowing the fact that this move to the downside is coming, but this move to the downside is not going to come today. It's not going to come. Probably going to come later tomorrow or even Wednesday. Wednesday we're going to get this move to the downside. So that's if the market is to stick to the midweek reversal, the fact that the market trends in a particular direction and then reverses when it gets to the sub. But let's go back to our where we have our drawings right there. So where we're seeing a particular uptrend here, right? All the way from Thursday, Friday, Monday. So let me tell you what's gonna, if I was to get a break-even trade today, it's not gonna be a move that will completely reverse this trend. It might just be an impulsive move to the downside, and then we're gonna get a continuation into Tuesday, into Wednesday. But at some point, late Tuesday, Wednesday, make sure I'm gonna tell you guys to refer back to this stream, the Monday stream. Probably around Thursday, Wednesday, Thursday, so that you can look at these analysis. Yeah. So we're gonna get. So I'm hoping this today. I'm hoping to get this, so I can get maybe potentially make a break even on my trade. But I expect this either Tuesday or Wednesday to get this move. This big move Tuesday or Wednesday. That's if the market is to stick to with its midweek reversal. So I don't expect the market to reverse today. The best I can hope for, like I said, if this pattern were to happen on a Wednesday or Thursday, then you can potentially get this whole big move to the downside. I hope that makes sense. Well, I'm making sense today. But like I said, you can look at this market and try to understand. So let's look at the previous week. Let's look at the previous week. Yeah. let's look at the previous week and see what the market has done. So the previous week, Thursday, we're going to look at the market from Thursday to Wednesday to see if we get a reversal around Tuesday or Wednesday, because that's the whole concept of how the market moves. So Thursday, we had a down move on Thursday, a little correction that lasted to the night, and then we had a market creating a new structure low all the way on Tuesday. So now if you look at this market, this is a bearish structure, a move down, a corrective pattern, a new structure low, yeah, all the way to Tuesday. The market corrects, and then the market drops on Wednesday. The market drops on Wednesday, and then from Wednesday we started to see a trend reversal. A trend reversal from Wednesday all the way. Like I said, you can expect this around Tuesday or Wednesday for the market to reverse that trend again and continue the downside. So this is something that if you understand the concept of the midweek reversal, if you understand, you know, I'm not saying this is consistent all the time, but most of the time this is the way the market moves most of the time. So that's why sometimes this is a strategy that swing traders use a lot. They know exactly how long to hold on to a particular position or when to actually exit the position. You know, there's some people that trade like this. This is a strategy that other people use. They enter a trade on a Wednesday and they don't close the trade until the following Wednesday, because they know if the market finds a particular trend, if the market is in a particular trend from Wednesday, Thursday, it's likely going to keep that trend until the following Wednesday before it reverses. And this is exactly what we're seeing here. So like I said, you're going to have to refer to this live stream if we get a reversal on Wednesday or late Tuesday. Like I said, I expect to get a reversal. I expect to be taking a short trade around Tuesday, Wednesday. So yeah, you can use this strategy. Just apply this to every single. You can look at every single currency pair. You're gonna see the patterns. And I repeat again, you're not gonna see it consistently every single week, but you're gonna see at least 7 times out of 10, 70% of the time. This is where the way the market kind of sticks to this. Like I said, we can go through all of this, but this is not this is a live trading session. It's not a strategy explanation. Besides, this is not it's a strategy that I occasionally use to kind of in combination with my day-to-day trading strategy, but it's not a strategy that I trade specifically. And you have to be a swing trader to use this strategy effectively and trade it almost every time. You have to be a swing trader, and I'm not a swing trader, I'm a day trader. But obviously there might be some of you out there that are swing traders, and if they're looking for something to kind of give them the edge, a slight edge, and understanding, how long to hold on to a position and when to exit and stuff like that, then you can apply this perfectly to your trading portfolio. So that's why I said at the beginning, I don't expect this to be a winning trading day. I mean, if I take a break even, I'll be happy with that. I mean, I'm just looking for a little pullback around. So we're already on 1 o'clock already, so I'm going to add on to my position. Almost bit that. I'm gonna add on to my short position, but again, I'm gonna go with the same. It's gonna be a losing trade, but I might get this kind of move potentially, this pullback move potentially, before the market continues going up. But I know this market is we're not gonna get that reversal today, guys. We're not gonna get it. It's gonna come on late Tuesday, Wednesday. So do you guys don't have any questions on the group chat, even based on what I just said now, the explanation, what I just explained right now? If you do have anything that you want me to go over, and I will do that. Come on, give me some questions, guys. The market has already done 75 pips today, so the longer the higher it keeps going, the stronger the trend that we're going to be getting. So Like I said, yeah, this is not gonna get we're not gonna get reversal today, but we can potentially get that um that move to the downside, that little pullback. If I get that, then yeah, that would be a break-even day. You're wondering why I entered a new sell trade when you say the trade won't reverse? Because there's something like I've already said this before, that this is my rules. My strategy has rules that I follow. This is the way I've I've traded this for over what I've analyzed over the behavior of this pattern for over 2 years. What you need to notice is the fact that even though I've entered a new sell trade, both the two positions that I've got open right now, they're at the equivalent of one single position that I usually start the trade with. So if you're here for my last 3 streams, then you're gonna see the fact that every single time the first position that I usually open is with a zero point 0.1 lot. This is based on the money management as well. So me entering a new sell trade, even though I know the trade won't reverse, I said the trade would reverse, but I didn't say the trade will not give me a pullback. So I'm not interested. Reversal, I know the reversal will not happen, but the pullback could potentially happen. A pullback that will erase at least 30 to 40 pips of this whole move. It can happen. So I entered a sell trade based on that pullback. If I get that pullback, I will take a break even. But I'm happy to take a losing day today. But the losing, it's not gonna be a huge. It's not gonna be a huge loss just because of the position size that I'm using. So even though from the start of today I knew this market will not be a winning, it's the chances of it being a winning day, it's very, very low. I know that, but my strategy tells me it's a short trade, and I'm not gonna go against my strategy. That's what I'm showing you guys. It's all about consistency. It regardless of what what you think the market is gonna do, regardless of what your brain, thinks of which direction the market is gonna go. The only thing you have that can guide you is a strategy. If you follow your rules every single day, consistently, I've seen this strategy gives me profit return over profit return. So there's no point for me to kind of try to be smarter than my strategy, if you know what I mean. But won't a sell stop be safer to enter? No, I've never used a sell stop on this strategy. It probably would be, yeah. But like I said, what I'm trying to tell you is that the fact that it doesn't, I'm not really bothered about like today's trades. Like I'm already prepared to take a loss, and I know how much that loss is gonna be. If you know what I mean, I'm prepared to take a loss. The point is, I'm trying to control how much I'm gonna lose. And the fact that both positions right now have not equaled my usual starting position, so I will follow this market until New York sessions. By New York section, we should get a reversal. We don't get a reversal, I'm happy. It's not gonna be I mean, as you can see, the way this market is moving, it's not going aggressively in the opposite, in the up direction. It's not, because it's in the reversal zone. The market is still, but the fact that if the market is gonna obey that midweek reversal, midweek reversal strategy, then it's not gonna you're not gonna see a huge impulsive move to, but this is what it's gonna do. If it's gonna do, it's probably gonna give you that reversal before it can continue on to, going up for all the way onto Tuesday, late Tuesday, Wednesday, and then before we get that move coming. And this is totally different compared to the strategy I traded on Friday. On Friday, when I saw, is a similar pattern. But while on Friday, I got a buy signal with my strategy, Because on Friday I took a buy signal here, and I told you on Friday, if you haven't watched Friday stream, go and watch it. And I told you on Friday, the market is not gonna do anything but go up. This is like as sure as I can ever be on a trade based on this strategy. The market will not do anything but go up for the rest of the day. But this is not the same as that strategy. This is a strategy where I know it's 50-50. And if this were to happen on a Wednesday, I'll be a lot more confident of taking a win on a trade. Today I'm not so confident, but I don't mind. Like I said, because I'm not risking too much. I mean, I'm not risking too much. And we've got all the way till about, we've got an hour and a bit before New York opens. So yeah, at some point, like I said, at some point we are gonna get this move. If it happens, I take a break even. If it doesn't happen, I take a small loss and I move on. I live to fight another day. You have to learn to be able to take losses in trading. If you're a trader, you have to be able to take losses, and it's not about trying to because I see what the question that a jury asked in terms of like, if you know the market is going in the opposite direction, so why are you still short in the market? Yeah, so it's kind of weird to kind of answer that question, but I think what I told you in regards to like following your rules, that's the only thing that's ever gonna help you. You need to have a strategy. You need to have a strategy that you've traded, you've followed a particular, and it's all about rules. The market has rules. I've already shown you how the market always sticks to the rules. So you need to stick to your own rules, regardless of what you might think, regardless of what anyone would say, would tell you. It's the rules. I could have taken a long trade today if the market had given me a long trade signal. I would have taken a long trade signal here. And with this strategy, I never know which direction I'm gonna go until 12 o'clock hits on the dot, and then I will know exactly which direction my strategy tells me I'm gonna be going. So it's all about rules. Just follow your rules, regardless. Do not even think about anything. So yeah, like I said today, I do not mind taking a small loss on this trade, but I'm hopeful that it could potentially be a break-even day if I get that move to the downside. But whatever happens, like I said, Tuesday, Wednesday, we're gonna get that big down trade, and I have a feeling it might be around Wednesday morning. And if that happens on Wednesday morning, then obviously that yeah, all I can say is just you guys try and tune into Tuesday or Wednesday, probably Wednesday, because that move down, my strategy will gonna give me a short trade on those days. It will give me a short trade because, like I said, the market is currently in a reversal zone, and this market would reverse very soon. Maybe not today. Definitely, I don't think it's gonna reverse today. But today is just being on the side of getting a pullback. Really, that will give me a break even, and yeah. So let's wait and see. Like I say, we're close to we're getting close to that point where the pullback that usually happens, which is around 130, or even probably New York Open. Any more questions, guys? Anything you want me to look at? Any currency pairs? Let's see what I think the RSI is showing divergence, even though I don't really trust. Like I said, I don't really trust the RSI. If you saw my stream on Friday, I told you the RSI was useless on Friday because there was no way the RSI was gonna. Um, yeah, but we're seeing divergence on the RSI, oversold, overbought, and it's showing a lot of divergence. So that pullback, there's a chance we can get that pullback um, today. That little pullback that will give me. What's my take on the GBP Aussie pair? Okay, so let's analyze the GBP Aussie currency pair, and let's analyze that. So GBP Aus, where is GBP Aus? Where is GBP Aus? GBP Aus, there it is. So GBP Aus, look at the market on a higher time frame. So we go on a weekly chart. I'm seeing a okay. Straight away, obviously, my thoughts are the market is bearish. That's the first thing you're able to kind of understand from looking at a market on a higher time frame. The direction of the market should be pretty clear. Yeah. But now we're coming into a correction, so I'm not gonna, I could follow the trade here to show you all the bearish movements, but I'll take the recent bearish movement here. And looking at this, so the market is in a corrective pattern right now. Now this could be a corrective. This could be a standard 1, 2, 3 corrective pattern. So at some point we can expect the market to come and break the high, this previous high, before it goes down, giving you a classic 1, 2, 3 corrective pattern. Currently, if you look at what the market is doing, try to focus on the current situation of the market. This is obviously a sell setup. This is a sell setup, and you can see the market has already broken that. It's come down, but we didn't go too far. So the market, I expect this to crawl up and break this previous structure here at the top, giving you the classic 1, 2, 3 correction before we see any move down. So at the moment, I would say short term, I'm looking at GBP Aus as a long trade in the short term. And because you have to remember, we're looking at this on a weekly chart. So this is all going to be a corrective pattern. This is all going to be a corrective pattern for the market to go down, which is in a way, I think it's going to be driven probably by the GBP USD being weak, because I think I've already looked at the Aussie Dollar currency pair. I looked at Aussie Dollar and we saw that the Aussie Dollar is bearish as well. So Aussie Dollar is bearish, GBP USD is bearish, so GBP Aus is looking like a bearish market as well. In terms of dropping this down to the much lower time frames, let's see if there's any kind of a. So on a 4-hour chart, again, you're getting a kind of a bullish market on a 4-hour chart. Impulse leg here. The market is probably give you a little correction here before we go up. So we're gonna go up all the way to break that structure on a weekly time frame before the market goes down. So, but let's look at this on a 1-hour time frame. There's not really anything to kind of. No, we don't have any kind of advanced pattern forming or anything. But yeah, GBP Aus short term long, long term short. Okay, let's see what our market is doing right now. 5 minute time frame. Let's go. Bring in a distance. So okay. And also, there's something that you have to kind of understand as well. You're welcome, Jerry. There's something you have to kind of understand as well. Like, there's something about following rules that if you're a professional trader who has been consistently profitable, you're gonna realize that following. I mean, after realizing the fact that taking a loss in trading is something. It's normal. It's normal. There's nothing to you know you will take losses in trading, no matter how good you are or how bad. You will take losses. I mean, but you have to understand that you want to take a loss in a trade when the market does something completely out of the ordinary. Then it's fine to do. What you have to realize is, if you break your rules, like for example what I said today, I've come here by telling you guys that the fact that today I expect to take a losing trade, even though you know I know exactly what the market could potentially do, which is it could potentially just keep going up um, before it reverses. So I could potentially take a loss on this trade, um, but my rules told me that that's exactly what I should do. I should take a short trade. So if I was to like ignore my rule and try to be like clever or smarter than my rules, and then decide to take a long trade, and um, for example something happened, there might be a financial, a fundamental news that comes out, and you get a huge pullback, and then if you take a loss after breaking your rules, it's gonna hurt a lot more than if you take a loss after following your rule, if that makes sense. So to me, breaking my rules is what gives me pain, not losing a trade. I can handle losing trades. I don't mind losing a trade. But I cannot go against my rule. I just can't. Because I follow the rule that consistently gives me profit. I'm never gonna break that. So no matter what this is what you're gonna say every single time I come on this live trading stream. If my rules tells me that I'm gonna, even if I don't agree with what my rules tells me, I'm still gonna follow my rules, because I was already mentally prepared today to take a loss, because I saw what my rules told me, that I need to go short. But in my head, I know the market is gonna go up, so I'm prepared to take a losing trade. The only thing I have to do is just kind of adjust my money management in a way that the loss is not going to be something that's going to be it's not going to be damaging, if you know what I mean. So trading is a huge mental battle. Trading is not, that's what I'm saying. I think I've said this in the last stream, where people think trading is a very, very easy profession. In terms of learning how to trade or understanding how trading works, that's the easiest thing in the world. That's very easy. You can learn all of that in a week. If you're dedicated, if you have the time, you can go on YouTube, you can put videos, you can learn everything there is to know about trading in a week. But actually going through the emotions is something that's gonna take you a while. It's talking about years, 3, 4, 5 years of constantly going through pain before you even get to the point of understanding how the whole psychological concept of emotions, and how to able to control that. And you have to do a lot of things that you wouldn't normally do. Like I said, for example, here, I mean, if I think back to myself when I started trading, I mean, I usually just go with what I think is gonna happen. I mean, I can look at strategy, I can follow the trend, what I think is gonna happen. But if I do this consistently, like I'm gonna do this consistently, follow my rules in terms of giving me this kind of trades, and the ones that I'm gonna win, they're gonna outweigh the one I'm gonna lose, because this could happen on Tuesday or Wednesday, and that would be in line with the midweek reversal, and the profit I'm gonna take on that trade is gonna outweigh the loss I'm gonna take on this trade. But if I start kind of going against my rules, sometimes occasionally, where on this situation I was like, oh, I think the market is gonna go up, so I'm gonna go against I'm gonna go long. And sometimes, and when it gets like Wednesday, Tuesday, Wednesday, I might do the same thing. Because the moment you start going against your rules, it's easy for you to kind of forget to get to, because if you go against the rule, you win. You can get overconfidence, and overconfidence is something that can kill you as a trader as well. And again, that's part of the emotional side of trading. Getting too cocky, getting too overconfident. You know, the moment you take a couple trades, take a couple big wins, you think, oh, all of a sudden everything you turn is gonna touch into gold. Everything you touch is gonna turn into gold. So you try to go into trades with bigger risk, feeling too confident. And if there's anything as good as humbling people, it's trading. But as soon as you get to those highs, the losses will come. So that's the first step that you're can ever take as a trader to understand emotions is you have to be very disciplined to follow your rule and just consistently follow your rule, regardless of what your brain might tell you, of what the chart might tell you, or anything. Just if you have a trading strategy where you followed, you've seen consistent results, the rules is gonna determine everything. Because like I said, even the market follows rules. The way the chart moves is all based on a particular rule, and it follows that consistently. So if the market can do that, why can't you? As a trader, why can't you do that? More questions, guys. Expect you guys to ask more questions. Let's go. And they put the link to my FX book. That's the link to my FX book in the description. So if you guys wanna Okay, we're 1 hour from New York opening. But at any point now, I do expect the market to give me that pullback. If it doesn't, then we'll just take the loss and come back tomorrow. Like I said, either Tuesday or Wednesday, we are gonna get that move done, and that's when the profit. I can expect to make profit on those days. Today is not the day. I already knew that from the beginning. But yeah, it's about just following rules and be consistent, and just consistently trade the plan really. And again, I'm waiting for questions. You're not asking too many questions. On Friday was really good because almost every single minute someone is asking questions on Friday. What's up, fam? The algorithm just sent me here. Let's see what you got. Not much, as you can tell. This is what the title says. I'm streaming, doing live stream trading every weekday from 12 to roughly about 2:30 UK time, and yeah. So at the start of the stream, obviously, I explained to you the kind of which direction or which trade I'm gonna be, whether I'm selling or buying, and I only trade the GBP USD currency pair. That's the only pair that you're gonna see me trade on this live stream, simply because it's the I mean, I live in UK, and I live in London, so, and the GBP USD is, it's only volatile during the day basically. So when I wake up at 7 in the morning, I do trade other strategies as well. So 7 o'clock in the morning, and obviously New York session as well. So you have the UK and the New York session all happening during the day. So that's the only reason I trade the GBP USD, and also because I've done a lot of research on that. I've studied the charts for the past 2 years, and studied the behavior of that pattern every single day. Oh, nice, nice. Yeah, I could have traded the euro dollar as well, to be honest with you. Um, but yeah, so it's good. It's good that you only trade I mean, this is probably, if any trader is looking for an advice from me in terms of like kind of how to kind of approach trading, I would say just keep it simple. First of all, just try to understand and master a particular currency pair. It doesn't matter. It could be an indices. It could be anything. Um, because like I said, those things, they have a way of repeating themselves. They have patterns that they repeat themselves. So if you're able to study one of them, then you can do it. So nice that you only trade the euro dollar. That's good. I'm guessing you've already done your. Do you watch DXY and GBP for divergence during London sessions? No, I don't do that. I don't watch any other currency pair. I don't use any indicators apart from occasionally. Sometimes I use RSI. Um, but yeah, so that's the if you're able to do that, then if you're able to just focus on one currency pair, then you can you can help yourself in a way. Because like I said, these markets, they all tend to behave. They have a pattern that they follow. All the patterns are different because of the different days, different times of days that they are active. Like if you were to trade the Aussie dollar or the New Zealand dollar, those patterns, those currency pairs, you can expect them to be more active during the night, really, and as opposed to the GBP USD or the Euro dollar or any other currency pair that's active during because of the time difference. So you can expect different behaviors from those two currencies. So it's it's not wise to trade almost every single currency pair unless if you've done in-depth research into understanding every one of those currency pairs and their behavior. Then you can kind of diversify and trade all of them. But really, I think it's easier to just stick to one. And yeah, do you use price? Yeah, I use price action. Of course, I use price action. You need to use price action. You can't. Um, but really, my trade is just based on understanding the patterns on a daily basis. So I've studied the daily movements, the daily patterns that the GBP USD has done over the last 2 years, and I know the kind of way that when I see a pattern, I know exactly how that pattern is going to behave, if that makes sense. But the behavior of the pattern and the trading signal that my strategy gives me, sometimes they can contradict each other. Like today, at the beginning of the streams, I told you guys that this is probably going to be a losing day because I expect this market to not reverse until around Tuesday or Wednesday. But then my trading strategy gave me a short sell, a short signal. So I took a short trade, and I could probably, I mean, so this is not a day that I expect myself to make some pips. Like, it's a day that if I get a break even, then it's an amazing day. And if I ended up having a losing day, then it's not going to be too much of a loss, if that makes sense. It's going to be a small loss. So yeah, but at the same time, the most important is the fact that I'm following my rules. So price action, yeah, sometimes I use price action. Like even on this trade, I'm expecting a big move to the downside to come in by Tuesday or Wednesday, possibly Thursday, based on price action. Based on price action, I can expect to get a short trade. Open high, of course. Yeah, that's good. That's good. If your price action is, you can never go wrong with price action. You can never go wrong with price action. But just like any other strategy, just like any other thing that you trade, nothing is ever gonna be 100% kind of. Nothing's gonna work 100% of the time. You know. So yeah, but price action, yeah, I use price action. Like I said, occasionally I use price action. Like even this trade, I think the trade that I'm gonna take on Wednesday, on Tuesday or Wednesday, is gonna be totally, 50% based on price action. Because I expect this market to give me a move based on price action. And like say I can put this on a 4-hour chart and I'll show you. Again, price action. Read the market structure. You see that? Pull back. New structure low. This market is pulling back to the previous structure. I expect this price action to continue. But like I said, with master, I combine a lot of things. I don't just trade once. This strategy that I'm using to trade that I'm using to do day trading, I combine a lot of strategies, a lot of the things that I know about trading. So that's why earlier I explained the midweek reversal for you guys. So the midweek reversal, I I'm combining the midweek reversal strategy. I'm combining price action. I'm combining trend following. And I'm combining my day trading strategies. It's almost like 4 or 5 different strategies rolled into one. The main thing that's controlling, okay, price action tells me we're gonna get a bearish continuation. Midweek reversal tells me that bearish continuation is not gonna start until late Tuesday or early Wednesday. Yeah, exactly. So yeah, I can see my case. You're familiar with that, with the Tuesday, Wednesday low. high of the week. Yeah, you're familiar with that. So that's along the lines of midweek reversal as well. And that's exactly why I used into I did explain that a few minutes ago, where I did expect, the midweek reversal to come into play. Yeah. So yeah, I can see there's someone who, he's familiar with the midweek reversal. So, and that's really important, especially for swing traders. I know a lot of swing traders use that midweek reversal a lot, because I mean, that kind of guides where they enter and exit, or how long they stay in a trade, in a particular trade for. Um, but yeah, so we're gonna get this. We're gonna see how price action is gonna come into play. Like I said, by Tuesday, Wednesday, and I expect this market to go down. But based on the midweek reversal, that's not gonna happen today. The best I can hope for today is a break even if that happens. If not, bring on Tuesday and Wednesday for that trade. So yeah, like I said, I'm here every weekday from 12 to about 2:30 UK time. Yes, you're absolutely right. Like it's yeah, that's basically what the strategy, my strategy is about. Really, you can summarize that with that. Um, but yeah, but this one in particular, it's a pre New York session that I'm doing, and even that one, in terms of how the market behaves, the patterns, they can be different as well. So, but I do have, like, UK session strategies that I do trade as well, and also post New York session strategies that I do trade. And also, like I said, this account that I'm trading on the MT4, um, I've connected that to my FX book. So you guys, every single trade that I take on this account is going to be reflected on my FX book, and the link to my FX book is in the description of this video. So if you guys want to have a look, I've only started this on Wednesday last week. This is the 4th day of live stream. Is it possible to make $100 a day using MT4? That question is, there's a lot missing in that question. There's a lot missing in that question. First of all, the platform you use doesn't matter. It doesn't matter what platform you use. You can trade and make profit. Doesn't matter what platform you use. Secondly, how much is your capital? How much is your capital? For you to make $100 a day, it depends on how much your capital is. Because it's all about it. Again, it factors into consideration the risk management. Like, for example, you can't tell me that if you have an account of $500 and you expect to make $100 a day, like, you're living in dreamland. So again, it depends on your and when you talk about making a certain amount in a day, even that question is a bit. It's not. It doesn't. Trading doesn't work like that. Because first of all, you need to have a strategy. You need to have a strategy that you follow. And not every single day, that strategy is not going to give you a buy or sell signal that's going to turn out to be a profitable trade. If that makes sense. So you have to kind of look at the things as a whole. You have to kind of look at the, probably, if it's say, you can make an average $100 a day. Yes, you can. You can make an average $100 a day, but notice the fact that I said an average, because if you're trading, you can have weeks where you might take a loss, you might take a break even, you might take a huge win. So it's this is again the mindset where when people come into trading, they have to realize that this is not a profession where you every day you're gonna make money. If anyone tells you that, you better just put your shoes on and just run in the other direction. Yeah, again, try using them. But the thing is that with demo account, nobody loses. Nobody ever loses a demo account. So I would say just if you're coming into trading as a first timer, yeah, you can use a demo account to kind of understand how trading works or how the platform everything works. But don't ever judge your performance on a demo account as a guide or as a yardstick for what you can do when you put an actual money into trading. Don't ever use that, because it can never because trading a demo account does not involve the use of your emotions, and emotions is the biggest part of trading. Is the biggest part of trading. Yeah, exactly. So this, yeah, a jury put it very, very perfectly. Making $100 a day will depend on a lot of things, such as one's risk, appetite, trading strategy, lot size, and account funds. Yeah, exactly. I've touched on a lot of things on those as well. So yeah, so don't ever see it as that way. Just your focus should be on just learning how to trade, not how much you're gonna be making every day, or because like I said, there's so many factors. People underestimate how difficult it is to be a trader. Like it's difficult. There's so many things that you have to kind of know how to do, kind of master. There's so many different things, and a lot of them have to do with the emotional side of trading, not the actual theoretical part or whatever. Because like I said, you can learn how to trade in a week. You can go on Baby Pips. There's a website called Baby Pips that teaches you everything about trading from A to Z, everything about trading. So if you're someone who has time on your hands, let's say you have nothing to do for a week, you can study Baby Pips in a week and understand every single aspect of trading. But that's not gonna make you a trader, you know. That's not gonna make you a trader. Trading psychology, emotions, a lot of things. That's the thing that and to be able to master trading psychology and emotions, you have to go through the pain. I mean, I've spoken this on Friday, and the fact that yeah, exactly. That's a good way to put it. Very good way to put it. It's best to work on your risk reward, trading psychology, consistency. Yeah. See, this is when everything is just all around that psychology and emotions. A lot of things. Of course, money management is important. The risk and is important as well. But those are things that you can learn. You can learn, risk and money management in trading. And I like how you teach, bro. What's your idea? It's in the description down below. I have it in the description. You can. Well, what you're gonna see from me, it's really the truth about trading. Not like one of those people on IG that try to kind of get your money by selling you some courses and stuff, and not actually telling you what it takes to actually be profitable in trading. Because like I said, it's a lot of things. It's not just about you know if it's that simple. Think about it. I mean, I don't know if you're familiar with the statistics of people that are actually successful in trading. Less than 5%. That's the statistics. So if you think about it, and and a lot has to do with the psychology, because that's one thing that people can't, you know, that takes time to master. That takes time, and the only way you can master psychology and emotional side of trading, you have to be able to go through the pain. You have to blow a few accounts in your trading career. You have to blow some few accounts. You have to take losses that's gonna hurt. Yeah, exactly, exactly. That's a fact as well that I'm familiar with. 90% of traders lose 90% of their money in 90 days. Yeah. So that's why you should never trust people that try to show you screenshots of their account of, you know, when they have a good month or a good trading day. I mean, like I said this on Friday, any trader, it doesn't matter your experience. You can be a new trader. You can have an amazing day in trading, or an amazing week, or an amazing month where everything you touch, almost everything you touch, turns into gold. Like every single trader you place becomes a winning trade. It's not difficult to have that. Because if you think about it, trading is, I mean, if I place a trade, the market could either go up or down. So you know, your chances of making a profit on a trade is pretty much 50-50. It's pretty much for 50-50. So any trader can has an amazing day, a good week, a good trading month. But the consistency to do it month after month after month, because you're not gonna, if you trade for 3 months, it's not gonna be, the market is not gonna do exactly the same thing that your strategy is telling you to do for the whole 3 months. No, because it moves in phases. It moves in phases. So out of those 3 months, you're gonna have 1 month where you're probably gonna break even, or you have a losing month. And then the ability to recover from that, from a bad trade, or from a losing streak, and then consistently follow your strategy and trade consistently. That's what's gonna wanna do that, because you're gonna have ups and downs. That's why they said 3 months. You're gonna have ups and downs in those 3 months. So the ability to be able to recover from the downs. So we're not talking about just that's what I'm saying. Those people that just show you a screenshot of one amazing month or one amazing day of trading, and they try to sell you dreams. Like, yeah, that's true. Yeah, you can like make a living with 50% accuracy if you have a proper. Yeah, you can do that. Support and resistance. Nah, support and resistance is useless. I wouldn't say it's completely useless, but the thing is that almost every single strategy you learn about in trading, they will they will work sometimes. They will work sometimes. But that's what we're going back to the previous statement that this guy made about 90% of traders lose 90% of their money in 90 days. That's because all these strategies that you're learning off the internet, all these strategies like support resistance, like head and shoulders, so many patterns out. Those kind of basic patterns that you learn. They would work some of the times. But then they're not going to work all the time, because I can go through a chart and I can show you so many different levels, because the market is not, if a support or resistance strategy is going to work all the time, it means the market is never going to go in another, it's only going to trade in one direction. Just try to imagine that. So you have a support level. A support level is a level where the market doesn't break and doesn't go below. It bounces off the level and goes up. So if the market doesn't, if a support strategy is going to work all the time, it means that market is never going to go down. It's just going to keep going up. But it doesn't work like that in the market. The market breaks resistance and support level constantly, every single time. Because if you look at this, for example, if you learn about support and resistance, you're going to tell yourself, oh, here we have a support, a resistance level here. Yeah, this is a resistance level. This is a resistance level. And you're trading, you're going to be like, okay, the market comes back to the resistance level. I'm going to be looking to short the market here. The market has broken that resistance level, hasn't it? So this happens constantly in the market. So you might get lucky on the first one, you might get lucky on the second one, but then you're going to lose on the third one. And you're going to say to yourself, oh, we know this market is, when the market breaks the resistance level, it becomes a support level, right? So as the market comes back here, you're going to be looking to go long. And I can bet you that if this happens on a midweek, that's why you have to be able to understand multiple strategies and be able to combine them. Because if this happens on a Tuesday or Wednesday, this is going to be completely, the market would obliterate this level completely. So there's more to trading than just knowing the basic strategy. And there's no, and trading is a very, very broad field that you have to understand a lot of things. Yeah, facts. You have to understand market structure. Different market conditions may require exactly. I look at my trades in the series of tens and not. Yeah, exactly. Oh, this guy, this Marquis kid. You should come here more often. I like the way you're talking. You're talking with someone who, you're talking like someone who actually understands. Because a lot of the things they're saying, those are the kind of things I want people that are watching this to understand. Don't ever look at the first, second, third. You have to look at, you know, consistency over a huge amount of trades. I mean, before you can see a pattern emerging. Do not ever judge yourself. You know, if you, for example, I mean, this is what I'm trying to show people. Like the first trading day I streamed on this account, I lost a couple trades. Yeah, it was a huge loss. But I told you guys that don't even pay attention to this. Just wait after a couple weeks, a month, and you're gonna see a clear pattern, because there's no pattern here. There's no pattern whatsoever. This equity curve. You're gonna see a pattern to it. When you're consistent and you follow the rules, you're gonna see the pattern to it. So, but if it breaks support, it has to go back up at some point in time, right? If it breaks, not really, not really. The market can break a support level, and it can be a change of direction completely. Because what you have to understand is there's three different market structures. You have a or three different market structure conditions, or whatever you want to call it. You have bullish, you have bearish, and you have consolidation. So the market is always going to alternate between those three market structures. It's always going to alternate between those three structures. And I mean, it spends a lot more time in consolidation than it does when it's trending, because that's a fact. If you look at consolidation, contractions, corrective patterns, they take a lot longer than when the market is making impulsive moves. So, but obviously impulsive moves are where you make the money. That's where the huge, kind of trend is. A lot difficult to trade. So that's what, even looking at the three different market conditions, market structures, you need different strategies to trade all of them, because you can't use a strategy a strategy that works in a bullish market to trade a corrective structure or consolidation, because you're not going to get the same results. So saying if a market breaks the support, it has to go back. It doesn't have to go back, because if for example, if you're looking at the market that's in a consolidation after so let's say you're looking at we had a downtrend or an impulsive move to the downside, and the market comes into a consolidation where it puts an amazing support level here. If the market breaks that support level, it doesn't need to come back. It might come back, retest it, and it's just going to keep going down. But again, this is depending on the structure. Here you're having a kind of a bearish structure that was followed by a consolidation. If it breaks that support level, the market can keep going down. So don't ever use support or resistance as the only, like, to trade as the only strategy that you trade. Don't ever use that. I can promise you that it's not going to end well for you. And I'm not saying I'm not saying to stop using it completely. You can never rely on a single strategy to trade, to be a forex trader, to make money in trade. You can never rely on a single strategy. You have to have the ability to combine multiple strategies in order to make a decision in terms of where the market is. You have to be able to have that ability. So if you know support and resistance is good. It's good that you understand how it behaves. Now move on to the next thing. Knowledge, seek knowledge, and be able to combine those things. If it breaks, it has to go back up, come down, right? You have expansion, reversal, pullback. Exactly, yeah, bro. I'm just asking questions. Yeah, I understand you're asking questions, and I like the fact that you're asking questions, but I'm trying as much as possible to kind of, give you good answers instead of just giving you, short answers. Like I could have decided to just say, oh, don't trade support and resistance. It doesn't work. But I'm trying to give you explanation on why it doesn't work and why you should never just solely focus on that. I'm not saying you should disregard that from your strategy portfolio. No, it's good that you know strategy, resistance and support, but try to use it as a backup plan, because there's a lot of basic strategies that you learn in trading. Those strategies are never going to make you money, but they're not strategies you can completely ignore. Like I use those strategies sometimes, but it's only like a backup or confirmation sometimes. Like even things like reverse head and shoulders, I use that as a confirmation sometimes. You know, this triangle pattern, all this, there's so many patterns that those patterns you should only try to use that as a backup. It should not be as your main trading strategy. I'm not trading on chat so much. I sold my Xbox when I started. Wow, that's dedication, my case. What about your RSI? Is that not a form of support and resistance? Yeah, again, okay. So with the RSI, and even though you can see that's the only indicator I use, but the thing is that with my strategy, the way I trade my strategy, I know exactly when the RSI is completely useless. So just because an RSI is overbought or oversold doesn't mean the market is gonna reverse. Sometimes it does, sometimes it doesn't. This is one of the things that you always hear me say. Sometimes they will work, sometimes they won't work. But with my strategy, I have ability to know when it's gonna work and when it's not gonna work. Like if you just do me a favor, maybe after this stream, look at the stream I did on Friday. Yeah, on Friday I took this trade on Friday. I took a long trade here on Friday. And in the first 10 or 15 minutes of my stream, I mentioned the fact that the RSI is way overbought. But I said in my stream that this is completely useless because this, even though the RSI is completely overbought, I expect the market to continue going up for the rest of the day. And that's exactly what the market did. So my strategy, I know exactly when this is completely useless. But you're going to see me use the RSI sometimes when it's not completely useless. So it's all about, now the only way I'm able to kind of arrive at this complete conclusion is the fact that I was able to use two different strategies. And sometimes one can give you a signal so strong that it's going to make the other one, so it's going to disregard how, important the other strategy is. So that's what I'm saying. When you're using this resistance and support and all sorts of strategy, they should only be a backup because there's going to be times where they don't work. And you have to be able to understand why they didn't work. That's what I'm trying to say. Like here, I understand exactly why my RSI did not work. Why being overbought is completely useless in regards to what my strategy told me on that day. Yeah, exactly. And yeah, indicators are not really indicators. You can never rely on indicators. Because if you look at some of the indicators, some of them they give you the signal after the market has already made the move. So they're not something you can rely on to trade. But just know that you're the one that those all other strategies that you're seeing, that you're learning, all the basic ones, they should only be used as a confirmation. Because that's the basis. That's a beginning of your learning, and it's good. It's good to learn it. It's good to know. In fact, when I started trading, I had to learn all those strategies. I learned about all those strategies when I started trading, and I thought at that point, I could use that strategy to go and make money in trading, but then, you find out that it's you're not gonna consistently make money with that strategy. That happens. So don't be discouraged that I'm telling you that it doesn't work all the time, but just expand your knowledge on trading, and don't just rely on that alone, because trading is a really, really broad field where you need to be able to understand a lot of things. There's so many things that you have to be able to understand and be able to put most of them into developing a strategy that works for you. Maybe overbought on small time frames, but equilibrium on the high. Exactly. So that's exactly. Because they give different readings. It's just like you looking at time frames and trying to understand which direction the market is going. If you look at different time frames, not all time frames are going to give you the same reading. You can look at a 5-minute time frame and see the market is bullish. You can look at a 1-hour time frame, you see the market is bearish, and then you're going to be like, oh my god, what's going on? They're like that with indicators. You look at indicators on a shorter time frame, you might see overbought condition. You look at it on a higher time frame, you can see it's somewhere in the middle, and then you're confused. So I remember when I thought moving averages, RSI and MCD on the 5 minute time frame would make me rich. Oh yeah, yeah. I mean, oh, we all remember those days where you learn something, and the way they teach you, or the way you learn it, you see it. They're gonna make it so easy. It's like, oh, overbought straight away. The market changes direction. You believe, oh, like magic. This is easy. So as soon as you see a market being overbought, you just sell. You know, it doesn't matter what time frame. You just sell it, hoping that the market is gonna reverse. That's not gonna happen. You know. So it's what I would say is just try and just seek to expand and understand and expand your knowledge in trading, because don't ever stop with just the resistance and support or other strategies that you might know. Keep exploring, keep seeking to learn. And I mean, that's why I'm here. I'm gonna try and help a lot of people. I'm doing this every weekday, you know, same time every weekday. So if you're gonna come here, you're gonna see how. I mean, I think even on the stream on Friday, I did kind of explain to you guys one of the strategies, one of my favorite strategies that I do trade, which is for the UK session, the pre-UK session strategy. And if you haven't seen that, I would say go on, really try to understand that strategy, because that strategy is going to help a lot of people, a lot of people. Oh yeah, exactly. They teach you those elementary strategies so that they know where to stop your losses at. Yeah, yeah. It's all a kind of thing to kind of draw people in, and then that's it, because you're never gonna yeah. And trading is one of those things where the moment you start learning it, the moment you get into it, the fact that temptation to make money just kind of like it catches you in a way that you're never gonna like, that it even kind of forces you to kind of keep going even when you lose, because we know, especially us guys, I mean, the way our whole kind of DNA is like, we don't like losing, you know. See, as a competition, we don't like losing, you know. You lose, you just wanna kind of get back your losses. And let me take out this glasses. So yeah, that's what I'm gonna say. Just seek learning to improve, learning to kind of gain more knowledge, and I don't trust people that try to kind of, you know, show you some kind of, what was I saying, like all those, one week wonder, 1 day wonder in trading, where they show you a account statement where they've had an amazing day or amazing week, and try to, because those people, I find out that they don't really know how to trade at all. They don't know how to trade. Um, so yeah, it's a very as long learning curve when you're trying to learn to be a trader. So this trade might extend all the way to New York opening. Like I said, all I'm looking for to potentially get a break even. Like I said, if this market just give me something back in the region of 30 to 40 pips retracement. So anywhere in that region. Um, Anywhere in that zone, I'll be closing my trade, and then we just move on to tomorrow and see what happens tomorrow. Oh yeah, oh yeah. That's good. That's good, because trust me, risk is also controlling your risk It's also like I cannot stress how important that is. That is like super super important in trading as well. Um, yeah, so as you can see, I mean, there's so many kind of boxes that you need to take to kind of, and you have to go through experiences as well, and those experiences are one of the things that's going to shape you as a trader. It's really really, so that's what I'm saying. Don't be scared of losing money in trading. I'm not saying you should go and lose on purpose, but don't be scared of putting money on the line and to lose. If you can't put like, if I'm not saying you go and put a lot of money on the line, just put something that you can, as cliche as it sounds, invest the money that you can afford to lose, you know because you have to go through, the way I say, you have to go through the pain, because to even start to understand, how to kind of manage your emotions in trading, you have to go through some kind of a pain. You have to feel what it's like to lose. I say you have to learn to lose a fight in order to learn to win. You have to, it's just a, I think that's just a natural thing, you know yeah, look at trading like a professional sport. And for professional sports, you win and you lose. That's how it is. You win and lose. You come into trading expecting, or with the fear of not wanting to lose, or you don't like losing, or you think you can't lose. Like that's the worst thing that you can ever do. Yeah, exactly. Yeah, in trading you have to. Let's have a look at the account now. Still lingering somewhere in break even. So if I do get the pullback, I can potentially maybe make a little profit in on this trade. Um, Everyone misses. That's what, it doesn't matter. Like you can, you know, even, I mean, I'm a football fan, and in football, one of the kind of easiest, I mean, that easiest kick, or we call it penalties. That's probably one of the easiest. People see it as very easy, even though it's incredibly hard. I mean, but it's probably the easiest chance you have to score, because a penalty kick is just you and the goalkeeper. So, but then again, the incredible amount of pressure. It's just like it happens everywhere in trading. You get that kind of pressure, even though it looks easy. It looks easy, but it's the huge pressure on you in terms of emotional pressure, psychology, everything. Because every single trade you make is gonna impact how you move on to the next one, win or lose. When you lose a trade, how do you feel inside? You kind of, sometimes it's like you feel like almost like your next trade is gonna be something like, it's like you're gonna be out for revenge, really. Almost like you're gonna be out for revenge. You lose a trade, you want to win the next one. You win a trade, you get too overconfident, and you think, oh, you can just glide through the next one. It's like every single thing you do affects your next move. That's why it's not easy. It affects your next move. Yeah, so this stream is definitely gonna last until New York session. But let's see, maybe 15 minutes, half an hour into New York sessions. That's probably gonna be the end of the stream. So I still got about half an hour, 45 minutes probably to go. Um, but it's gonna depend on when I get this pullback. If I get this pullback, then it could um, end any time really. Yeah, I mean we're nowhere. We're pretty much sitting on break even. But and you get days like this, and also you have to remember that every single day is different really in trading. Mondays, the market have a way of we moving on Mondays, and sometimes you don't really get the market being too volatile. I'm like, kid, who told you it's fact? Not even. Uh, no, I don't. I don't think you need any evidence to support it. You have to. Why don't you trade? Try trading yourself. If you can go past 3 months and not you haven't blown your account, then I would say you pretty much are gonna be a profitable trader. That is a very good yardstick in measuring how in measuring how profitable you can be trading. That is a very good yardstick because I'm telling you, 90% of traders don't make it that long, and I'm speaking from experience as well. So yeah, I don't think you need us to give us any evidence. All you have to do is just go and try it. If you can go past the 3 months and be on a and not and you haven't blown your account after 3 months, then I would say you've pretty much mastered the art of trading. So yeah, I don't really want this stream to be too long, but so I'll probably end it. Let's see what New York session comes into play. If I don't get that move like 15 minutes into New York session, then I'm gonna end the stream and I'll tell you exactly what I mean, the thing is that you've got the link to the my FX book on the video anyway, so you're still gonna be able to see the results of the trade. But I'll tell you exactly what I'm going to do if I don't get that move by the New York session. I mean, we're not too far off. We're only 17 pips away from where I want the market to go. But yeah, so I'm not don't want to keep this stream too long. Yeah, well, we're not saying that you can't blow your account after 6 months or 1 year of trading. We're not saying you can't do that. But I'm just saying that if you're able to go past that 90 days, that 3 months mark, then you're not too far off from being a professional trader, a profitable trader. Because you have to remember what I said earlier. I didn't say that once you go past that 3 months, automatically you're guaranteed you're a professional trader. You're 100% a trader. No, I'm just saying you've overcome a huge mental block that you're not gonna need too much work in order to do this professionally all the time. So yeah, of course you can blow your account after 6 months, after 1 year. That's possible. But once you go past the 3 months, barrier, it's like that is a huge mental block that you've overcome. That you don't need too much work, if you know what I mean. Anyway, so 9 minutes before New York opens, and any more questions for you guys? Because like I said, probably 10-15 minutes into New York Open, I will be ending this stream. But yeah, I mean, still nothing really, just sitting close to break even. This year is a bull run. Lots of people makes money in trading. That does not mean they're. Yeah, but you have to try to, you know, what kind of question are you answering? Like, because from the way you're talking now, it doesn't seem like you're talking about someone that's actually trading professionally. You're more like talking like some. There are people that make money from trading and they're not professional traders. You know, there are people that just kind of buy. We're talking about like buy the dips or buy stocks that are low or buy even cryptocurrencies that are worthless, and they come back after 6 months and they've tripled, quadrupled their account. Those are not the kind of people we're talking about. We're talking about someone that's gonna come into to trade every single week or every single day. Trade every single week, every single day. Going through the process of day trading or swing trading. Those are the kind of people we're talking about. Because those you know you have to trade like that to be challenged emotionally by the markets. We're not talking about those people that just make long-term investments, people that just because I have friends like that, friends that buy worthless cryptocurrencies, and you know, in 6 months times they've tripled, they doubled their account, you know. So you're not gonna class that as trading. You can't class that as trading. The people that do this on a daily basis, that do this as a profession, the average retail trader, that's what we're talking about. Not those people with big money that they can afford to just invest money that they don't even think about for 6 months, you know. Because there's not much, there's that doesn't involve the use of too many emotions. Okay, we're 4 minutes away from New York opening, so oh god, what is going up? Has a stream just Okay, we're less than a minute away from New York opening. Looks like this is not going to give me the pullback I want. But let's see. Okay, so in about 10-15 minutes I'll be ending the stream, and yeah, but I'll tell you guys exactly how, you know, I might not necessarily close the trade unless if this market goes up and gives me a higher high and a higher close. Yeah. Yeah, so okay, I'm gonna be closing the trade then, guys. I'm gonna be closing the trade. Bought the trades. Because that pullback is not gonna happen probably until, I mean, it will happen, maybe, maybe not. But it's a day where I expected to take a loss. So I'm gonna wait for my FX book to just update, and then I'll show you guys. And that's probably gonna, so in about 3 minutes. In about 3 minutes time, once it updates, I'll show you guys those trades. And yeah, at this moment I'm just living for that big downside move on Tuesday, Wednesday, late Tuesday or early Wednesday. Yeah. So hopefully you guys are gonna join me tomorrow. Today has been actually so much fun. We've had a lot of interesting people in the live chat, where we had a very good discussions about trading, which I really like, guys. So hopefully you guys are gonna tune in tomorrow, and yeah, we'll we'll see. Yeah, the link to this is gonna be in the description, guys. It's gonna update in about 2 minutes time, and you can see that trade. So same trade that I just closed here, in terms of, not that one, account history. Yeah, so you can see these two trades. and so yeah, we'll just at this moment in time, the market could just continue to move higher for the rest of the day. But like I said, it's in that reversal zone where Tuesday, Wednesday, hoping to use the midweek reversals sign and then see how the market is going to reverse on Tuesday, Wednesday. And on that trade, guys, we are going to be on that side of the trade, 100%. So let's see what pattern or what trade direction my strategy is going to tell me to go in tomorrow. So okay, so finally updated. So as you can see, the two trades that I've just closed, they're still going to show here as well. Yeah, those are the two trades that I've just closed, and it hasn't been a wonderful start, I have to admit. I mean, 6 trades, 4 losses and two wins. So but like I said, don't ever look at these as like try and see a few. This is where we're talking about consistency and trading, as opposed to what someone is just saying about people just buying dips and holding and waiting. Like, this is trading. This is something that you do on a daily basis, and you have to go through all these challenges where you're gonna lose sometimes, you're gonna win sometimes, and you have to be able to have the mental strength really to kind of be able to take each day as it comes. Win or lose, you live to fight another day. It's not a situation where after losing a trade you get angry and be like, oh no, I have to get my wins back. Like, that's gonna come. The wins are gonna come, the losses are gonna come, and you just have to be consistent, follow a trade plan, and hopefully you're gonna take more wins than losses, and have a good money management, and try to kind of like today I expected myself to lose, but then it's all about following the rules and trading your plan. So even though my head tells me that the market is going to give me a losing trade, so I was able to kind of limit, because if I had used my normal lot size, then I probably would have taken a double the amount of loss that I've taken today. So yeah, we'll live to fight another day. We'll come back tomorrow, same time again, and let's see what the market is going to give us. Like I said, this is going to be in the description. My FX is going to be in the description. The link is already there, so you guys can have a look. And I hope to see you guys tomorrow.